Hello everyone, Justin with Deep Dive Stocks here, and today we're going to be taking a more advanced look into LDPM and LDPS using ES futures from Wednesday, September 17th as a teaching example where I think that there's some pretty good evidence that there was in fact a short squeeze on futures yesterday. So in this video, we're going to refresh some concepts relating to aggressive bids, aggressive asks, liquidity vacuums, and how we can look for all of these activities within a chart. So let's go ahead and get started. To start out, we're going to do a quick review. So we're going to, and if you haven't, definitely recommend checking out the other videos. That go over these topics, maybe in slightly less, with less expediency. I'm going to try to keep this video relatively short. So, quick recap. If I could do it correctly. Oops. Forgive the horror real quick. Okay, so a quick recap. I guess I do like this one. All right, so remember when we're talking about the market, we have this organic ask, and it sits on top of this organic bid. There are several places that transactions can occur. So for instance, if we transact up at the organic ask, then LDPS will say at organic ask. If we are somewhere in the middle, LDPS will indicate if that is an eager party or an aggressive. And if we transact down at the organic bid, let me move this real quick. Then LDPS will tell us at the organic bid. So there are these kind of three levels that where we can transact with in our minds. Additionally, LDPS will tell us something about who is in charge. Where is liquidity flowing? If liquidity is flowing to the ask, this means that the ask is controlling transactions. In other words, the bid has some sort of need. If instead we're flowing to the bid, then the opposite is true. That means that the ask is the one with the need, and it's up to the bid to be a willing counterparty. So what we see when we find these aggressive cascades, so let's take, for instance, an aggressive ask cascade. What it's telling us is that there is an ask that is moving directly down to the organic bid, and most likely liquidity flow is moving there as well. So this aggressive ask is a liquidity taker. It digests all of the eager bids, and it moves directly to the organic bid. And that's kind of the hallmark of an aggressive party, and in this case, the aggressive ask. The aggressive ask cascade is defined by large in sync LDPM upwards movement. And then we like to see that followed by the scoop. And we've seen examples of this, and we're going to see it here soon, but the idea is that LDPMs, all of them, will suddenly point up. And what this is telling us is effectively everyone is now in ask. Because remember, when LDPM is above spot, it's a resistance, or it is an ask. Resistance is kind of an easy way to describe it. And so when we see LDPMs shift directly up in unison immediately and with a lot of zeal, then this is telling us that effectively LDPM is measuring only that everything is now an ask. Even if there was bids below before this aggressive ask cascade or this aggressive ask entered, the overwhelming force and flow of liquidity is such that effectively they don't exist anymore. Everything is now just an ask. And the same is true for, say we have then spot, and then all of a sudden spot. This is telling us that everything is bid. Everything is now well below LDPM. And another part to this is that the distance between the LDPM and spot is the magnitude of this aggressive party. So in other words, the more the LDPM shifts, the greater the apparent transformation of everyone to one side is. So in other words, how much LDPM moves is directly associated with how aggressive this aggressive party is. And that about, I think, covers the foundations of what we're going to see today. So today what we're going to do is we're going to take those pieces of the puzzle, we're going to look at ES futures on the 1 minute, and we're going to start seeing, I think, some curious patterns. So let's start right as market opens. And let's just watch how things progress. I don't think actually the first aggressive ask cascade walks in. We have a little in the pre-market. We have a little bit too in the pre-market, but they don't have the same characteristics that we're going to see. We're going to see that the reason why I'm particularly interested and why my current prevailing theory is a short squeeze is that these aggressive ask cascades have some very particular findings. So here's the first one. We see that in findings that you don't normally see. So we have this eager ask and we're already flowing to the bid, right? So if we were to just quickly draw this, and this is going to be a little longer video than normal. So if we have this organic ask and we have this organic bid, we now see that we have a eager and we're flowing to the bid. So we have this eager ask and presumably this eager bid. And we know there's an eager bid because LDPS is not telling us at organic bid. So we know it must be above the organic bid. And that can only really be an eager bid. And we see that the liquidity flow is moving to the bid. So that tells us that the eager ask is greater than the eager bid. It's starting to digest down that eager bid. And so if this is true, what we should see is if that eager bid goes to 0, then we should see, here's our organic ask, organic bid. We should then see the classification of an aggressive ask, and liquidity should flow still to bid. So we have this eager ask chewing through the eager bid, and we can see LDPM L5 trying to act as support. But here, now we see that the aggressive ask cascade has begun. This eager ask, it says flowing to the ask, which is interesting, but I guess that might be some resistance to the downwards push. But the eager ask has started, price depreciates, and the eager ask steps out for a second. We see that things have now gotten pushed down to the organic bid. And once more, we see another eager ask, or another aggressive ask. So this means that indeed this happened. And once that happened, the aggressive ask increased. So once there was evidence that the aggressive ask had digested through the eager bid and then was actually transacting at that organic bid, they introduced even more ask. They opened the faucets. They know that they're at the organic bid. They're at the bottom level. This was the first sign of this isn't sort of regular shorting, right? This seems like a feeler gets put out, this initial aggressive ask, and then if things get down to the bid, or if I'm sure whatever metrics they use indicate that things are in their favor to push price down, they open the floodgates. But they don't open long. We see that they quickly leave. We get the scoop comes back up, and the scoop we can see is pushing things back up. So we are still transacting at that organic bid. And we had this organic ask. So we are still transacting, but liquidity flow is starting to move back up to the ask. So this tells us that the change in the bid is growing, and the change in the ask is decreasing. And we get that for a while, and then things recover briefly. And then we're going to notice in about 1 hour, we get another, or no, it's 30 minutes, yeah. We get the introduction of another aggressive ask cascade. This one is the only one that is singular, but it is singular and the largest magnitude of all of the aggressive ask cascades that we are going to see. So we had that already. So, and I wonder if they noticed that they were already still at that organic bid, right? We immediately start pushing things down to the organic bid, and we get once more the introduction of this aggressive ask cascade. It pushes spot down reasonably well until we get a little bit of dip buying. Now we see like real good dip buying, and this is again the scoop, the infamous scoop. And we know that now price is going to start recovering a little bit. So this is now the third aggressive ask that has entered. And then we will see in about 30 minutes from there. And we get throughout the whole, when the aggressive asks aren't present, we see that spot kind of just hangs around the liquidity around LDPM. We get a little flow to ask. We should start seeing, and then there we go. So we start seeing the introduction of a mini aggressive ask. A little bit of a scoop, and then we get another aggressive ask. Now here we see that we were pushing things down to the bid, but we weren't really able to move things away from us being, in this case, I'm taking the position of the shorter. So we were starting to digest through, but we didn't. We weren't able to do that. Little flash of bearish, little flash of bearish. We have the eager ask, flow to ask. And then we should start seeing another aggressive ask cascade. And this one, you'll notice, is pretty decent. This is the same size as the second tap, a little smaller than the aggressive ask that entered the hour prior, but bigger than the two aggressive asks that just entered. And I'm assuming these are testing the waters. I'm assuming the shorters come in, they set their market limits, and they see pretty much how far they can move spot. And the ideal is that this can move down to the organic bid. The organic bid then starts moving spot down. But if they don't notice that, I don't think that they engage. I think that if they see that they're just if they're the ones being absorbed, then they back off. So we see then the introduction of quite a substantial aggressive ask cascade. At least it's the third largest, but of the first taps that occur, we're going to still consider this one a two tap guy. I definitely think they noticed, or they took advantage of the declining price. But we know from LDPM and LDPS that that was a good move on their behalf because they were already at that organic bid. Here we see that the first tap brings things down to that organic bid, and we're pushing things down. We get a little bit of a scoop. And what's interesting is notice that the two tap guys, if we go, about 5 minutes. About 5 minutes. Yeah, you could convince me, but we didn't go over it some. So we should be expecting another tap here soon. And perhaps this might be it, but yeah, there it is. So then we get another one. This one's a little longer. But yeah, this might be, this is 8 minutes. They might have gone for a triple here, actually. I didn't notice that one first. So they shorted 3 aggressive ask cascades back to back. You get a little bit of a scoop. We get the neutral liquidity. And now we have the introduction of this aggressive bid, which is not ideal for the shorters. This helps bring the spot up. And we see we have, by now, a lot of dip buyers. A lot of buyers coming in and dipping, or buying the dip. We should see about 130, a little bit. This is a very eager ask, not quite aggressive. It doesn't, the LDPM 1 doesn't make it above the LDPM 6 and 7s. But we are this is evidence that we're trying to push spot down. We do have this little aggressive bid cascade here. So there's definitely two aggressive parties battling it out. And if our pattern tracks, then about 130, we should see the introduction of another aggressive ask. Currently, as we lead up to this 130 benchmark, we have this eager bid flowing up to the ask. Another aggressive bid, and here's that aggressive ask. So we can see that things right about 134, an aggressive ask enters and attempts to do its thing, right? So we should see within a few minutes another tap. But what's interesting is note that this is going to be, as we see, and we can see here, so this is the first one where the price has appreciated during the initial tap. So in the first one, price fell, and then we had that second aggressive ask cascade walk in, and the price fell even more. In this one, we had price was falling, we were at the organic bid, so the shorters came in and did their thing. An hour later, we had the aggressive ask cascade, price depreciates not much, but it does, and then the second aggressive ask comes in, and price appreciates again. Same here. We have the first tap comes in, and even if we do or don't consider this to be evidence of a second cheeky little tap coming in, these three, we see that after each one, price depreciates, presumably in line with what the shorters are looking for. This one, however, we see this aggressive ask walk in, And instead of price depreciating, we actually get evidence of this little mini aggressive bid cascade. But if anything, price appreciates, which is not part of the plan. So we see an eager ask come in, and yet it gets swatted down. So a little bit of an aggressive bid. And we see here, once again, they try for another aggressive ask. And we see this time LDPS is picking up on it, that there is now an aggressive ask that has entered, and things are now trying to be pushed back down to the bid. And again, remember, the idea is for shorters, if you have, if say this is your, right? And then say this is your eager bids, right? And down here is your organic bids. And let's even say you have an aggressive bid. It really doesn't matter, because the shorter needs to digest the aggressive ask, needs to be able to digest that aggressive bid, and it needs to be able to digest the eager bid. And it has to do that if it wants to get down to that organic bid, who will then start facilitating the price depreciating. So we have the introduction of this organic ask, and relatively on time, and it immediately gets absorbed. And as it's being absorbed, we see this aggressive bid cascade walk in. And again, it's around the time that we expect this second tap to come in. The first tap wasn't successful in even stopping the price, and about an hour or so later, they try again. But this aggressive ask, I think this is where things got noticed. This is where there was someone else in the market that picked up on this behavior. And as the market orders came through, because to digest a aggressive and eager bid, you typically send out a whole bunch of market orders. They get met because that is both of those parties are typically less than current organic bid. And as they are digested, then you send in your limit orders to start moving, ensuring that you start transacting at that organic bid, and then the process of moving spot down starts becoming facilitated. So I think that they noticed these orders starting to come through and turned it against them. Immediately went for organic bid, which then moves spot aggressively up. If you're the counterparty with a limit order that's above the current market spot, and the ask sends market orders, the ask is going to go to where the bid's limit order is. And I think that's where we're seeing this aggressive bid cascade, because effectively we have this ask in this bid. This guy sends orders to digest through those organic or those aggressive bids and those eager bids, right? But what this bid does instead is send limit orders. And so now the aggressive ask is way up here, being forced up to the ceiling. And we get some profit taking. And again, we get another aggressive bid. Do we even see? So flow to ask, flow to bid. And I mean, we have to assume that these big players have some pretty sophisticated tools. And I think that they, again, noticed that the organic ask, or this aggressive ask, is increasing in size and trying to push down to the bid, right? And that's why we get told that the flow is now moving to the bid, because the aggressive ask is greater than the eager bids. And so the pressure to transact is now becoming the bid's problem, right? Or the bid is the one with the control over the faucet. And in response, we get another aggressive bid cascade. a pretty reasonable one. So, and that's kind of the same playbook, right? Where we get this, you try to move things down to the bid with markets, and then the bid, slaps back with limit orders. We're going to pause it here because this is kind of like the where things start to really, because so far, what do we have? Well, we have evidence of this. We have this pattern of aggressive asks that seems to be associated with attempting to move spot down per LDPS, because LDPS keeps telling us that there's this first tap. This seems to digest through the eager and, if present, aggressive bids. And then a second tap comes and pushes things down to the organic bid. And we also then see during those second taps a significant price depreciation. We see, however, the moments when the first tap is unsuccessful in moving spot down, we get a less intense or more muted second response. We see that this occurred a little bit here at noon, and then once again at around 3:30. And then what changed at the 3:30 mark is that we start getting, in response to these aggressive asks entering these aggressive bid cascades, we get this intense response of pushing things to the ask. We then see an aggressive ask. We saw that for a brief moment, things started trying to push things back down to this bid after this aggressive bid cascade. The ask comes in and tries to push things down once more. And the immediate response is to open the faucet again and send another aggressive bid cascade upwards. Now, we got to kind of talk about we talked before, but we're about to see it in real life. So let's briefly cover it once more. But if you have a aggressive ask, or in this case, an aggressive bid, this is the ask, this is the bid, and that aggressive bid is moving up to the ask. If this aggressive bid disappears, you're left with this huge liquidity vacuum. Because the aggressive bid has essentially left any eager parties that would be present in the dust. And they've definitely left the organic bid that would be present way in the dust. So if we were to just immediately remove this aggressive bid, what we would find is that the eager ask now has to move down to the bid. And this will give a pseudo aggressive ask. Because now liquidity has to move all the way down, right? Or the source of liquidity is all the way down at the levels that the aggressive party has overshadowed, has like moved up through. And what we would see, so here we see the flow to the ask, and we see we're transacting up at that organic ask, and we're still demanding more from the ask. Remember, that's what that flow to ask means. It means that the demand to transact is flowing to the ask. But we're already at the organic ask. So we are forcing more liquidity out of the ask from this aggressive bid. It's a particularly strong response. And this would be what you would find in someone being short squeezed. You would see that they are now being chased by the bid, who is now being forced to transact because they have to get out of their position, and they have increased pressure to transact themselves because they're being squeezed out. So they would effectively become this retreating ask, which is an organic ask, and the demand to transact is flowing in their direction, so we see the flow to ask. And we see this profit taking come in. We see this flow to ask, and here's what I want to point out, this neutral. About a few minutes after this ask walks in, 2 minutes, we see that the liquidity moves from flow to ask to neutral. And What that means is liquidity is no longer flowing to the ask. The demand to transact is no longer being forced by the bid. So this means it must be the ask. So in other words, the wave is switched. What was once the ask that is retreating up and transacting because of this very aggressive bid, chewing up and chasing them, this is no longer the case. Liquidity is now neutral and it's just kind of hovering. So it's that, like, if we, kick a ball, right, we're now here. We're neutral. And that's not good if there's concerns, like we said, for a massive liquidity vacuum. The name of the game is everything is fine until that aggressive bid disappears. And one of the ways we'll know that aggressive bid disappears is if the demand to transact from an aggressive bid disappears. And we know that occurs because LDPS is telling us that things are not flowing to the ask anymore. They're neutral. So things aren't looking good. So what happens? We get immediate price depreciation, a reasonable candle. And now we're definitively flowing to the bid. So now we have the introduction of this aggressive ask cascade, and we're flowing to the bid. And there we go. It took 2 minutes for LDPS to recognize it, that we now in fact have this aggressive ask and things are flowing to the bid. And that's exactly what we said would happen when this cycle ends, right? Excuse me. So what do we expect to happen? Well, because we are this aggressive ask flowing to the bid, that tells us that this aggressive ask is going to move down to the organic bid, and that this is likely going to cause, oops, that's the wrong one. I'm getting a little optimistic. Massive price depreciation. And so let's watch that unfold. We're at the bid, we're at this, this flow to bid. We see here for a brief second this attempt to get a little bullish activity going. So we have this introduction of this aggressive bid. I think that these are the same people, truthfully. I think that they tried to squeeze again. But I think the addition of the spook that occurred, so all of these lower level LDPMs are profit taking. We see that there was a little bit of scoop. Those dip buyers came in, which then became a little bit of this aggressive bid that walked in. But we see that on top of not just the shorters, we had this profit taking. And I think that helped the shorters immensely absorb that bid that was coming through, because the bid quickly steps out, and then we see the immediate reintroduction of that aggressive ask. Right, bam. So as soon as this profit taking was starting to get absorbed by that by the bid, I think that the people trying to squeeze stepped out, and the aggressive ask just immediately re-entered, and price fell. Because now not only is the shorters looking to short, but everyone probably just got slammed by this hurricane. And now on top of the shorters, we have all of this profit taking and eager selling going on as well. That lasted, it seems, until about 257, where we start seeing the introduction of this. We see the scoop occur, so we know there's a little bit of dip buying going on. And we do see that things are now starting to flow up to the ask. And we get the reintroduction of the aggressive bid. So I'll leave it there because the rest is kind of just what happens towards the end of the market and then the pre-market. But all of that together is why I think that there was a short squeeze on futures yesterday. And to recap, it's mainly because there was this precedent of aggressive ask cascades that had this 2-tap pattern that looked like it was ongoing towards the giant price appreciation. And around the time that we would expect another aggressive ask cascade to walk in, we actually started getting these very serendipitous aggressive bid cascades that seemed to always arrive whenever there was an attempt to move liquidity or spot down to the organic bid by way of digesting any eager bids or any aggressive bids. And it was in those moments that we saw the introduction of extreme aggressive bids by way of those aggressive bid cascades. We then saw how the profit taking helped the shorting by way of bringing spot down. Dip buyers kind of hurt the shorters for a brief second. It looks like there was a second attempt to squeeze, but I think that by then the market was too skittish to buy into it to help out these squeezers. And so the squeezeed got more assistance by these profit taking. And then again, by then, I think the market was pretty spooked, willing to let things go down to that basement organic bid. And we see right around 245 or 250-ish is when the market felt like the dip was worth buying. And then we saw another introduction of this aggressive bid, and then the rest is kind of history. But I think this is absolutely the result of someone noticing that there was a shorter coming in, attempting to move spot down. And I think that they timed their entrance in the market with their data showing whenever this aggressive ask is entering, just, flood the market with bid. And I think that is pretty cool. But all right, guys, this has been a longer video than normal, but I hope it's been pretty entertaining and insightful. I hope it's been a good review of LDPM, LDPS, and how to use these tools in a bit more of an academic and nerdy way to really start peeling back the layers of what is occurring in the market. There's sort of different stages to using LDPM and LDPS. The first one is price above LDPM? Is it below LDPM? And what is LDPS telling us? Is it red? Is it green? The second stage is like, okay, I'm starting to get the hang of that. Now I can start recognizing aggressive bid cascades. I can start recognizing bull traps and bear traps. And then the third stage is this, where you are able to put all the pieces together and really start finding these narratives that fit the data. Because remember, LDPM and LDPS are just measurements. They're not like a model that's been like ANOVA'd or trained. It's a singular equation. So the things that it is seeing are just simply the things that it's measuring. And it's sort of us to understand the framework and to understand what those measurements might mean so that we can apply meaning to those measurements when we see those behaviors and data in the market. And I think this is actually a really cool example. Not usual to see this on futures, honestly, at all, right? Like this type of, I think the last time I saw Robinhood was a great example a while ago of there was absolutely some very fine what is that called? Statesmanship? I guess I'll just call it craftsmanship, but there was some very good craftsmanship with dealing with a overzealous shorter on Robinhood from earlier in the year. And so you typically see that these types of behaviors on individual equities. Very rare to see them on futures, which are traditionally just too liquid to really short squeeze anyone. But we saw the data, and the data are there, right? If it's not shorting, then we just simply need to figure out why these aggressive ask cascades were coming in a relatively steady frequency, why they had the pretty standard morphology of this double tap, and then why it seemed like when another aggressive ask cascade should have been coming in from this established pattern, we start getting some very, very opportune aggressive bids walking in. But all right, guys, that is the data I have for you, and I'm interested and eager to hear your opinions. Do you think this is fair? Is this not fair? Does this raise too many questions on the framework of LDPM and LDPS? Let me know. That'll help me decide which videos to make in the future. But all right, guys, I'm going to go ahead and get this one up, and I will see you soon for the after hours market dive. Adios.